If you're looking at refinancing and you're just not sure what are the right questions to ask, stick around. Whether you've refinanced many times in your past or you bought in the last few years and this is going to be the first time you refinance, these are important things for you to know so that you're educated when you go through the process and end up happy after it's all said and done. Along the way, if you have questions or comments, put them below. And if you want to challenge my thinking, I'm all for that. Drop those into the comments as well. So what are we going to cover here? We're going to cover things that come up commonly. So 2 to 3 things to think about, then a few pointers that I can share with you so that you make the right decision to move forward and close with the refinance. Because there may be times on the surface, it looks like it does make sense to refinance, and then it just does not. And hopefully you're aligned with a professional that will tell you if it does not make sense, rather than to try to convince you so that they close a loan and get paid for helping you. At the end, I'll talk a little bit about rate forecasting, what to expect so that you can make the right decision. I have some videos that have been posted. One of them does talk about some forecasts for the interest rate and the housing market the next 1 to 3 years. Make sure to check that video out. And there's a whole catalog of videos to educate you about wealthy real estate. As far as closing costs, one of the most common things that's asked is, I don't have the money to bring to closing. So what commonly happens with a refinance is an appraisal is done. These days, if you have sufficient amount of equity, the system may kick out an automated evaluation saying an physical appraisal is not required. That's just the system saying they're very confident in the value of your home. So if your payoff is X and the value is Y, that delta is your equity. So the loan program would say that your new loan to the value of the property cannot exceed this percentage. So more often than not, people add to the payoff the closing costs for the refinance. So if you weren't aware of that, hopefully that helps you out. Now, does it make sense to put it into the loan amount? Does it make sense to bring to closing? I have a video where I talk about one of the common misconceptions in calculating a break even, which is related to that skipped payment and the escrow refund. So if you haven't checked that one out, it certainly might be worth getting more knowledge about that. Because first and foremost, you want to think about longer term. Where are you at in the life cycle of this home's ownership? Meaning, do you plan to pay it off? I have people with aggressive savings or high earners looking to pay off the mortgage in shorter order. That person might be better served doing a 7-year ARM with a bar none lower rate. It may have a slightly higher closing cost, but it will allow them to have a lower cost of borrowing for the time that they hold the note. If you think you're going to make the property a rental, this is an important consideration because we have someone right now where that individual is in fact likely going to make it a rental if everything works out. So they are within a 2-year window, this property becomes a rental property. And you might say, why are they refinancing? They shouldn't refinance. It's going to be a rental. But if they're going to keep it in their family long term, I can tell you from the sake of the state of Colorado that average appreciation is 4.55%, which I've talked about many times over the course of decades of time, 7 recessions. That is the average appreciation in Colorado, up, down. Values, doesn't matter. Bank it 45.5% the next 10 years. We have a systemic shortage of housing in America. So what does that mean? Well, if I'm hell-bent on looking at a no points refinance, because a lot of people in my industry are pushing the no points refinance, rates will get better. Here's the truth of the matter. Nobody can guarantee that rates will continue to go down. Nobody can. There are talking heads in my industry that are analysts for the industry saying that this is going to happen, but everybody's been wrong. As far back as talking about the 2-1 buy down and how amazing of a loan this is. And yes, in short order, that can help with lower payments up front on buying a house. Most of those people now need to refinance, and because of market conditions, they may not yet still see a beneficial refinance, yet they have a higher mortgage payment because they were told to do a 2-1 buy down. Might they have benefited from a buy down, a permanent buy down? So points, no points. This is a big debate, a big discussion, because should you pay points? Maybe. It depends. If the house will become a rental down the road, if you go to refinance at that time, how are you going to guarantee what the interest rates are? If you do a no points refinance now, so that you can get a lower rate before it's a rental property, rather than if you pay the points now, you will guarantee a lower rate. And in your future, if you own that as a rental, you'll be happy that you had that lower rate. So someone who's able to think down the road to help you plan this does matter. We've also had people say, it's just not going to make sense yet. I want my payment to be, one recent example, $3,000 to $3,200. Great. So doing the math for them, they would need 4.25 to 4.99% interest rate, but they also want the closing costs, the break even on the closing costs to happen in relatively short order. However, for them right now, they can get high fives by paying a discount point, but to get into the low fours, we have to zoom out. You look at the history of mortgage rates, and you can say that over 5 decades of time, yes, there was a sliver of about a decade where mortgage rates were sub 5%, but before COVID, they were headed back up towards and probably over 5% if COVID doesn't happen. So if you were a betting person, would you go with 5 decades of data? Or would you go with 1 decade of data? You have to decide this. It's not to say that paying points or not paying points is the better way to go about it. Just remember, the person advising you not to pay points is looking at that situation and likely expecting that you'll come back to them to refinance again. I've heard people talk about free refinances, so I do talk about that in a video. Maybe check that out for you. I think really what it boils down to is, how long will you occupy the property? What's most important to you? Is it going to be closing costs? Is it going to be payment? You will absolutely not get the bar none lowest payment and rate with the lowest closing costs. This is finance, folks. That does not happen. It is not possible. Sure, a lender A may have a slightly better rate in closing costs than lender B, but on the surface, because when you get deeper into that, you will not get the absolute lowest rate with the absolute lowest closing costs. Not possible. So what I did say is I would talk a little bit about rate forecasts, what to expect. There's going to be a video coming out. If it's not out already on my channel, check it out though, because I do talk about some seasonality with mortgage rates. And what I found was very interesting that when you get to the end of a year, we have historically seen mortgage rates improve for a multitude of reasons, which I outlined in that video. So check that out. But depending on when you're looking to refinance, this could go into the lineage of, should you wait? Should you take action? And if a lender ends up telling you to wait, it does not make sense. And another lender you're talking to says, you need to do this because these rates are going to go up. Just think about influence, think about scarcity. That lender is trying to convince you, possibly, that it's a scarce situation. You need to take it before it's gone. That is a sales tactic, folks. So all of this is there for you so that you can be more educated when you make decisions related to refinancing. Get educated about the costs, what comes up commonly. Again, what about those out-of-pocket costs? Comment below, add questions. Make sure to subscribe if you like transparent information that's authentic about building wealth through real estate. We'll catch up with you again soon.